All right, welcome back, traders. Now, looking at the best trade setups for today. Now, just looking at the market on the face of things, and you get this with major releases coming up, right? We've got the Fed interest rate decision and statement, press conference, all that sort of stuff later today. Equity markets, well, a little bit unresolved, right? We need the information from the Fed. If the Fed talks about cutting, the equity markets will rally. If they talk about raising rates, which they're not going to do, or staying on hold for a long period of time, equities would sort of drift lower, right? But there's no flow between the equities and the currencies. Okay, you're probably watching for that risk on, risk off sentiment as we go through the North American session in particular. Now, just having a look here at the major currencies, right? As I said yesterday, most of these things are going to be drifting sideways through trend lines as it gets close to the Fed announcement, right? The US dollar being a part of all these trading instruments will determine where it goes. But this is the tricky part, right? The Fed, it's going to come down to their statement, and they're going to be very clever. I don't think they're quite ready yet to cut or be in a cutting sort of phase or very close to it, even though the market's 42% factored in for March. So if they say we're going to wait, and it may only be a matter of waiting a month, I think the dollar slightly rallies. If they say we're ready to go, and I don't think we're at panic stations yet, then we would see the dollar drift lower very quickly. But there's better trading opportunities here, and you need to sort of be able to sort of pick this up. And what I'm referring to is the Aussie data here, right? The inflation numbers. We've got some key inflation numbers. The best thing about these numbers, as opposed to the Fed meeting, it's a number, right? We've got numbers here to work with. Traders cannot mess up the numbers, right? It's either stronger, weaker, or as expected. And that's where the move in the opportunity comes from. Now, just on the, I'll come into the numbers themselves, but let me just come back to the actual charts, because there's some pretty interesting setups. Now, I just go over here to my Aussie template. Now, just looking at the hourlies, right? It's pretty clear the Aussie has been trending lower, but since the start of the year, and this is not uncommon, you know, with the holiday season, all that sort of stuff, and a bit of a disconnection of the data, we're now getting data into on our books, and we can start to see what's happening on the Aussie dollar. It has been drifting sideways, but we do, and we have, you know, we've got support and resistance levels. I can't see inflation getting better from here, right? So to me, the opportunity's on the downside. And if you look at the daily sort of view, you can see that trend line, that support trend line that's on the hourlies just here as well, comes in around 65.60. Okay, that is a key target. To me, the market hasn't wanted to sell until they get confirmation that the RBA is probably heading towards a cutting cycle. And that's what this data can do for us, right? And so just coming back, so we've got a key entry level here, a technical entry level, as well as the economic data. Now, there's a couple of things to think of just as you go into this, right? And like a lot of the data these days, the central banks are giving us a whole range of data, but the year on year is what they've been focusing on. And this monthly indicator, CPI indicator, right? Out of all the developed countries or the G7s, the Aussie is still the one that has their inflation numbers coming out quarter on quarter, right? It's too long. So the monthly indicator could be something that we need to keep a very close eye on. And I'll tell you why in a second. Previous inflation numbers 5.4, the key number here 4.3. Why am I referencing the monthly indicator when, you know, traditionally it's the year on year or the quarter on quarter data? Well, it's because that's what the central bank is looking at. Now, this is the RBA site, and they're not trying to make things difficult for you. They've got 5.4%, okay? The annual change, that's in September, right? There's a lot of things have happened. Now, there was a big splurge on the Black Friday shopping spree in November. Since then, retail sales has fallen off the map. Everything is shuttered to a halt. Now, this monthly indicator, 4.3, it's on the central bank site, so make sure you pay attention to that as well. 4.3 is the expected year on year as well. So what we think is if it comes out weaker than that, that cash target is going to come off very quickly. Now, if we just go in and look at the inflation rate here, I want you to get an idea of how this is going to change, how inflation can change very quickly. Obviously, you can see here 2021 through 2022, how inflation was incrementally gaining. When it stalls very quickly. And this is where I think we will see something. If we get something printed under 4%, this thing is going to come screaming off, right? So that's what we're looking for. So when we come back to looking at News Squawk, okay, looking for what's the expected number. Okay, you got the range here, quarter on quarter. The year on year is really what I'm focusing on, and the monthly indicator. Now, the RBA does have their own trim means. It does confuse things a little bit. 4.3%. So the key thing is here, we can't mess up the numbers. They are the same. Even the monthly indicator is 4.3%. It's a big drop off. I think below 4.3 is our trading point. Definitely below 4.2 or 4.1 gets the ball rolling massively. Like a 4% print, right? I think we'll see a bit of gapping to the downside. And you know what? The analysts, the journos, everyone will say, cut next month. You've got to start cutting. Even though the funny thing is, when you look at the overall band here, if I come back to the central bank's band, this is like a traditional sort of inflation band that Greenspan came up with right back in the early 90s, 2 to 3% range. Now, the economies are different to this, but that's what they're looking for. But if inflation comes out at 4% now, it's probably going to be at 3% next month. It takes 4 to 6 months for a interest rate change to impact the market. They know that, right? So do they wait for it to get to 2 or 3% before they start cutting rates? I don't think so, right? But anyway, there'll be huge pressure on them on the downside. That is the pressure point, right? Stronger numbers, yeah, it just stalls things, but the numbers are already weak, right? So I'm thinking if we get a strong number, it's an anomaly. Yeah, you might have a short-term trade to the top side. It's going to be volatile. It's going to be cranky. Downside, that's where the cash is, and that's where I'll be focusing my attention on the downside here. Now, what I would be doing is really blowing up my hourly chart so I can see very clearly the levels. Focus on this level. There could be an opportunity on a weak number. Don't forget, this is a CPI number, a lot of pressure, a lot of focus on it. So liquidity at the time of the release might be tricky. I'll be looking to trade live or give myself, if I was using a pending stop entry, give it some room on the downside, because really the ideal entry level here, this is what the technical levels do for us, give us liquidity, and they also take out the volatility because you can get into the trade as that level breaks, and it's only going to break if the numbers are weak, right? So it's a no-brainer, right? Putting in either trading live or looking to sell below 65.60. If it's a low print, it's going to keep running. So don't sort of get yourself all overexcited or anxious. That's where the cash is in my regard. Now, just prepare, last but not least, prepare for a number that comes out as expected, right? Which is 4.3%. Now, that number's been factored in. So we may not see any activity. You might see it pop up, pop down. Overall, the trend is lower. They are leading towards an interest rate cut, but just prepare for a number as expected so you don't get performance anxiety, you don't get worked up, and you just start trading for the hell of it. Anyway, that's my tips. The Aussie does look the best of it. Good luck and happy trading.